Do the richest of the rich really overproportionally benefit from the asset price inflation? And moreover, could it be that even the mighty Warren Buffett doesn't fully comprehend the effects of compounding interest? These are the topics of today's video. Hello and welcome. My name is Peter B. and I welcome you here at My First Million, where we are achieving our financial goals together. I came across a YouTube short with an interview of Warren Buffett, where he's stating that the richest of the rich are profiting much more from asset price inflation. And this led me questioning and do some calculation for this video. So before we go really dive into the calculations, whether or not Warren Buffett is right, let's have a quick look at the YouTube short so that we are all on the same page.
Who's winning?
The extreme rich are clearly winning. I mean, if you look at the Forbs 400, they had an aggregate net worth of $92 billion in 1982. It's $2.3 trillion today, 25 times as much. So the very rich have done exceptionally well in this economy.
So to sum up this video, Warren Buffett is stating that the richest of the rich improved their net worth from 92 billion to over 2.3 trillion. So, but what does this really mean? So this let me dig into the details here and try to calculate how much did the richest of the rich really profit from the asset price inflation. And for the richest of the rich, we can take a look at the Forbs 400. This is basically also what Warren Buffett did, which include the 400 richest Americans. So we are taking a look at the Forbs 400, and I made some summaries here. So 1982 was the first time that Forbes published the Forbes 400 list, the list of the 400 richest Americans. And in 1982, their aggregated net worth, so the sum of all 400 richest people in America, the net worth was 92 billion US dollar. So Warren Buffett in the interview was stating that their net worth now is 2.3 trillion. But unfortunately, I wasn't able to get a timestamp of the interview. But if he's saying that it was 2.3 trillion, I guess the interview is dated back to 2015. So, but as we just have passed the 40-year anniversary of the Forbes 400, I took the 2022 aggregated net worth into consideration for the calculations. So, to be fair to Warren Buffett, I'm calculating with a bit more recent numbers. So in 2022, the aggregated net worth of the Forbes 400 was 4 trillion US dollar. So this means after 40 years, the aggregated net worth was 43 times higher. So this is a mind-boggling number. However, if you have 92 billion, what is the expected amount that you will have in 40 years from now? So I try to make the calculations here. So what to expect? So I put down a list of interest rates, and we have 1982, we have the starting amount of 92 billion, and then if the 92 billion is compounded, so meaning every return is reinvested, in 2022, so 40 years later, you should be ending up with these amounts. Usually for my own calculations, I take around 7% interest rate into consideration. Why 7%? Because with a little bit more than 7%, I am able to double my money every 10 years. So 92 billion with a 7% compounded interest rate after 40 years should be ending up in 1.4 trillion. So 10%, you would end up with 4.2 trillion. 15%, you would end up with 25 trillion. And 20% compounded rate of interest, you would end up with a 135 trillion. Because we have 40 years, a very long time horizon, it really depends on the expected rate of return in order to determine whether or not you are under or overperforming the expected results. So what we know though is for a long period of time, if you invest all your money in the stock market, historically, so depending on what time period you're taking a look at and what study you're taking a look at, you could expect 7.5% to 10.5% rate of return. So going back to this list, with currently 4 trillion aggregated net worth, the Forbes 400 are basically just right on track to have a compounded interest rate of 10% over the past 40 years. So they are more or less in line with what would you expect if you have invested your net worth in the stock market. So then there are a few things that you might want to take into consideration when you are taking a look at those stats. So some relevant facts of the Forbes 400. So if you compare the list of 1982 with the list of 2022, you will realize that only 17 people of the initial 400 people on the list in 1982 are remaining on the list in 2022. All the rest of the people that were on the list, they either died or they either donated a big portion of their fortune or spent or lost a significant part of their fortune. Then another interesting fact is 275 people from the Forbes 400 are self-made. Or in other words, only 125 people are not self-made. So coming back to Warren Buffett's initial statement, the richest of the rich are over-profiting from the asset price inflation. Is this really right? So after taking a look at the calculations and the few facts, you can say partially yes and partially not. Why not? It's probably because it's not the initial 400 people that were remaining on the list and overperformed, but there were new overperformer going ahead of many people that were originally already on the list. Also, moreover, the performance wasn't really outperforming the markets. So with around 10% rate of return, they are just around market performance. But if you think about that many of those people on the list are self-made, meaning a huge portion of their net worth is in the stock market, in stocks of individual companies or maybe diversified throughout several companies. So you would expect that they also on average should be performing according to the stock market. So considering this, even a small private investor like myself is potentially able to keep pace with the richest of the rich, as long as I am on average more or less returning the average market returns. However, why the richest of the rich are overperforming, and probably Warren Buffett is still right, is because they have already a lot of assets they can rely on to generate a compounding rate of return. In contrast, the huge majority of the people, they either don't have any money, any savings or investments, or only a very small amount of savings and investments that they could be relying on to get a compounded rate of return. So this is the big advantage of the Forbes 400. They have so much money that they can afford to have a huge majority of their fortune constantly invested. And even if the stock markets are coming down sometimes, they can just hold it through some period of time because they have too much money that they probably even cannot spend if they want to. So, what is your take on this topic? First, are you agreeing with Warren Buffett that the richest of the rich are really overperforming and benefiting the most? And also, were the calculations of the expected results surprising to you? Did you expect that they should have had a higher rate of return or lower rate of return? Please share with us your thoughts in the comments below. Thanks a lot for joining me today. I look forward to seeing you in the next video, and especially I look forward to seeing you winning financially.